Hi traders, Nathan Bray here from ACY Securities. I want to take a look at global indices or stock markets. I'm going to focus on the US. I think technically both the Dow Jones and the S&P 500, they're poised at key technical levels. Let's start off and take a quick look at a few of the charts. So the Dow Jones is right up at major weekly resistance at 34,257. That also coincides from the all-time high, which happened only a year or so ago, down to the recent bottom at a 62 to 79% fib retracement level, in line with this major weekly resistance level where price is basically at the moment. Now, to me, that resistance holds. We see a continuation for the Dow Jones to potentially go lower. It could be a good time to selling stocks up at this area in the US. Why? Because we've got a few issues with the US economy, which I'll get to in just a moment. But let's take a look now at the S&P 500. So looking at the S&P 500, it's in a very similar stance. So what we're seeing is it's up around this major weekly resistance at 4,159. Now that level coincides with a 79% fib retracement level, in line with the fact that it's putting in lower tops and bottoms in line with a longer term trend. These are the levels that technical analysts dream of. Now, why might it fail here fundamentally? So fundamentally, the things I'm going to look at here to support the technical level of a potential failure are: we have a US economy that is contracting. We've got a whole array of negative data coming out on this US economy, along with the fact that Jerome Powell is coming out and saying they've got to continue to raise rates higher than expected. Raising rates higher than expected is stock market negative. Why? Because companies need to therefore cut costs. If they're borrowing money to expand, then it's going to cost them a lot more. Okay, and remember, they've risen rates very rapidly. This is going to affect how companies are going to perform, and therefore we could see a sell-off up at this key technical level. You throw in the fact that the 10-year yield, or in the debt market, okay, the debt market is starting to look more attractive. The US dollar is also looking really attractive as well. We've seen the continuation of the long-term trend. It's bounced on the DXY off that 101.20 level, major level of resistance, acting as support. So when you put all these factors together, if overseas people want to buy US stocks, then they've got to pay more because of the dollar. Why wouldn't they perhaps sell some of the stocks that they own at high levels and at key resistance levels and put that into bond where you're going to get a higher yield? All of these factors, for me, fundamentally are making stocks look very shaky, and technically they look like a seller's dream. Well, that's all from me. Have yourself a great trading week.